minus reserve for unexpired risk 50% in the case of fire, 100% in the case of marine. You got a surplus here, 2,60,000 profit, but you suffered a loss of 16,000. 50% in case of fire and accident, 100% in case of marine. Regarding the operating expenses, you'll get the management expenses, bad debt and depreciation. Hello, my dear student. I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. I am going to hand Corporate Accounting 2, 4th semester Unit 1, Session 3 of BCom in favor of accounting for general insurance company. I told in the last session, so there are two companies, one is called general insurance, another is called the life insurance. So general insurance will be made only for 1 year for particular event. The event may be accident, the event may be fire. Whereas the life insurance is made on a life of the particular customer. So general insurance will be made only for 1 year, whereas the life insurance is made for number of years. If the particular event is not happened, you won't get back any money at all. Whereas in the life insurance, you made the life insurance for 30 years or 40 years. Once the 40 years is over, we'll take back your money with the bonus. Either the life of maybe 30 years or death, whichever is earlier. Here, in the case of a general insurance, the particular event should be taken. By chance you made for fire, there must be fire should be taken. If you have got general insurance made for accident, you have to make some accident should take place, then only will get the compensation. This is only for 1 year, whereas the life insurance is made for number of years. This is a practical area. Whereas in life insurance will get the bonus, whereas in the general insurance, you won't get the bonus. This is a basic idea. Here, we are preparing only revenue account. This is a 10 marks. So, revenue account contains what is the items are. There are schedules are there. Schedule number 1, premium. Then we will go with the claims. Then we go with the commission. Then we go with the operating expenses. How the premium will be taken? Whatever the premium the customer will pay, it's the income to the insurance company. Premium minus less reinsurance premium, add outstanding premium of the current year minus outstanding premium of the last year, add opening reserve for unexpired risk, opening additional reserve minus closing additional reserve minus closing reserve for unexpired risk at the end of the year. In case of fire and accident, you have to keep about the 50% of the net premium. What is net premium? Premium minus reinsurance premium and outstanding premium of the current year minus premium of the last year is called net premium on that percentage. I'll repeat once again. What's the net premium? Premium received minus reinsurance premium, add outstanding premium of the current year minus premium of the last year. If there's the net premium on that 50%. So premium minus reinsurance premium, add outstanding premium of the current year, premium of the last year, add additional reserve for unexpired risk at the beginning of the year, minus reserve for risk at the end of the year, minus closing additional reserve. Then claims paid, add outstanding claims of the current year, claims of the last year, minus claims recoverable, that should be deducted. Then we'll go to commission paid or commission whatever will be received. Then we have paid the commission accepted should be added, ceded means received should be deducted. I will repeat, commission accepted should be added, commission ceded should be deducted. Then operating expenses, in that management expenses, bad debt and depreciation you have to take. Then you have to prepare the revenue account. We'll move with the problem now. From the following balances of Oriental General Insurance Company Limited as on 31/3/2017, prepare fire revenue, marine revenue account. Here, provision for unexpired risk, fire 5 lakh, marine 16,40,000. This is the beginning of the year. Claims paid and outstanding. Paid and outstanding is also there. 5 claims will come here. First is the premium. Next is the claims. Fire and marine. Additional revenue at the beginning of the year that should be added. Fire, marine. Commission paid that will come in schedule number 3. Fire and marine. Then premium received schedule number 1. Fire and marine. Management expense will come schedule number 4. Fire and marine. Commission and reinsurance ceded should be deducted. Provision for unexpired is to be kept up at the end of net premium for fire and 100% of the net premium for marine. So only 50% for fire and 100% for net premium for marine department. The additional reserve in case of fire insurance is to be increased by 5% of the net premium. So here the reserve for unexpired risk %. Provision for unexpired risk is to be kept for net premium of fire at 100% of the net premium. Reserve for unexpired risk you have to keep 50%, 100% for marine. 50% for fire and 100% for marine. So we'll go with the problem now. This is the answer. Schedule number 1. Premium. See that how much premium received? 12 lakh, 21 lakh, 60,000. 12 lakh, 21 lakh, 60,000 plus opening reserve. See that? What's your opening provision? 5 lakh, 16 lakh, 40,000. 5 lakh, 16, 40,000. This should be added. It becomes 17 lakh, 38 lakh. Plus additional reserve should be added. What's your additional reserve? Additional reserve. Beginning of the year should be added. End of the year should be deducted. So 10,000, 24,000. 10,000, 20, it becomes 17 lakh, 10,000. 38 lakh, 24,000. Minus reserve for unexpired risk. So 50% of net premium. What's the net premium is 12 lakh. 50% is 6 lakh. Regarding this 100% of marine, 100% of 21 lakh 60,000. It will come 21 lakh into this is your 100%. 21 lakh 60,000. Then you got once again 11 lakh 10,000, 21 lakh 60,000. Minus additional reserve at 5% on 12 lakh. It will come 60,000. This become 11 lakh 10,000. Then this becomes 16 lakh 60,000. Here 21 lakh 60,000. 16 lakh 40,000. 38 lakh plus 24,000. 38 lakh 20,000 minus reserve for unexpired risk. It is 21 lakh 60,000. 21 lakh 60,000 minus reserve for at the end of the year is 21 lakh 60,000. This is minus. So 21 lakh, 38 lakh 24,000. Here if you deduct now, it is 16 lakh 64,000. So 38 lakh 24,000. 38 lakh 24,000 minus 21 lakh 60,000. 16 lakh 64,000. 11 lakh 10,000 minus 60,000. 10 lakh 50,000. I will repeat once again. Whatever the premium received as per the problem is 12 lakh 21 lakh 60,000. Add opening reserve should be added. 5 lakh 16 lakh 40,000. It becomes 17 lakh. Another becomes 38 lakh. This is additional reserve should be added. This is 10,000, 24,000. It becomes 17 lakh 10,000, 38 lakh 24,000. Minus reserve for unexpired is 50% in the case of fire, 100% in the case of marine. 50% of 12 lakh is 6 lakh. 100% of 21 lakh is 21 lakh 60,000. The balance is 11 lakh 10,000 minus additional 5% on 12 lakh 60,000. The balance is 10 lakh 50,000, 16 lakh 64,000. This goes in the favor of premium. Then we'll go to claim. If we come back, premium is Schedule number 1, 10 lakh 50,000, 16 lakh 40,000. Claims paid, see that. What's your claims paid? Provision, addition reserve, commission, provision for unexpired, premium reserve, management expenses, provision for unexpired. Claims paid, how much you got? 3 lakh 80,000, 7 lakh 60,000. Claims paid, 3 lakh 80,000, 7 lakh 60. This goes in favor of schedule 1. Then commission paid. What's your commission paid? Fire, 1 lakh 80,000. Marine, 2 lakh 16,000. 1 lakh 80,000 minus 15,000. Minus reinsurance paid, addition reserve, commission, marine, provision for unexpiries, claims paid, premium, management provision for unexpiries, commission on reinsurance ceded, minus reinsurance. This is reinsurance ceded, 60,000 and 1 lakh 20,000. That is commission on addition reserve, premium received, commission on reinsurance ceded, 60,000, 1 lakh 20,000. Then operating expenses, schedule number 4, that is your management expenses, 2 lakh 90,000, 8 lakh, 2 lakh 90,000, 8 lakh. So total it will come 7 lakh 90,000, 16 lakh 56,000. So revenue A minus B, this is only A. All these belongs to B. So 10 lakh 50,000, 7 lakh 90,000, 16 lakh 40,000, 2 lakh 60,000, 16 lakh 40,000 minus 10 lakh 50,000. Premium is 10 lakh 50,000, 10 lakh 50 followed, minus 7 lakh 90,000, 2 lakh 60,000, 16 lakh 40,000, 16 lakh 40,000 minus 16 lakh 56,000, 16,000 minus figure, negative figure, say loss. The insurance paid me ceded now. This already received. We got this 1 lakh 60,000 ceded now. So accepted should be added. Ceded, this should be deducted. Commission paid minus insurance ceded, 60,000 minus 1 lakh 60,000. Operating expenses, management expense 2 lakh 90,000, 8 lakh. So total 7 lakh 90,000. Your A is 10 lakh 50,000 is the premium. Expenditure is 7 lakh 90,000. If you add 2, 3, 4, it becomes 7 lakh 90,000. 16 lakh 40,000, 16 lakh 56,000. If we deduct A minus B, you got a surplus here, 2 lakh 60,000 profit, but you suffered a loss of 16,000. So here, the point here, I take directly because no adjustment is there. So I take claims paid, commission paid, all directly I took here. See that if you want, you can prepare the separate account. If your 2 items are there, 4 items are, 1 is the premium, 2nd is the claim, 3rd is the commission, 4th is the operating expenses. So which are the 4 items are? 1 is the premium, 2nd is the claim, 3rd is the commission, 4th is the operating expenses. But how the premium will take? Premium minus reinsurance premium, add outstanding premium of the current year, premium of the last year, add additional reserve at the beginning of the year, add reserve for unexpiries, that is called beginning of the year, minus closing reserve at the end of the year, minus closing additional reserve. Regarding the claim, claims paid, add outstanding claim of the current year, minus claim of the last year, minus reinsurance claim should be deducted. Regarding the commission, commission received, accepted should be added, ceded should be deducted. So regarding the operating expenses, we'll get the management expenses, bad debt and depreciation. Same thing will given. So what we did, the same thing, premium 12 lakh, 21 lakh 60,000, same thing. Then management expenses, that is operating expenses, commission and reinsurance ceded should be deducted. Provision for unexpired risk regarding the 5 is 50% and 100% net premium on marine department. So 50% in the case of fire, 100% in the case of marine. 50% of the net premium in the case of fire and 100% in the case of marine insurance. Another one problem of same type. So this problem will be asked for 10 marks. I'm solving about 4 or 5 or 6 problems of the same type. So generally this is an easy problem and we'll get the 10 marks. From the following balances of National General Insurance Company, prepare fire revenue account and marine revenue account. Provision for unnecessaries at the beginning of the year should be added. Additional reserve should be added. Bad dates will come in management expenses, that is schedule number 4. Then claims will come under schedule number 3. Commission will come under schedule number 3, whereas claims comes under schedule number 2. First is the premium, second is the claim, third is the commission. Premium received will come schedule number 1. Management expenses, that is operating expenses, schedule number 4. Commission on reinsurance ceded should be deducted. Provision for unnecessaries, 50% in premium in case of fire, 100% net premium in case of marine insurance. The additional reserve in case of fire insurance is to be increased by 5% of the net premium. 5% of the net premium. We'll solve the problem. Premium received is 12 lakh, 21 lakh 60,000, 12 lakh, 21 lakh 60,000. Plus reserve for expiries at the beginning of the year. Reserve for expiries 5 lakh, 16 lakh 40,000. That should be 17 lakh. Plus additional reserve 1 lakh. It becomes 18 lakh. There is no additional reserve here. This is set at 38 lakh in case of marine. And reserve for expiries at the end. So 50% of fire, 50% of 12 lakh is 6 lakh. 100% of 21 lakh 60 is 21 lakh 60,000 minus an additional reserve at the end of the year is 1 lakh 60,000 in case of fire. It becomes 10 lakh 40,000. This becomes 16 lakh 40,000, the balance figure in case of fire, in case of marine. Then claims paid, commission paid 3 lakh 80,000, 7 lakh 60,000. So here claims paid. Come back here, provision, additional reserve, claims paid 3 lakh 80,000, 7 lakh 60,000, 3 lakh 80,000, 7 lakh, no adjustment is there. Come back to commission received 1 lakh 80, 2 lakh 16,000. Commission on reinsurance ceded should be deducted. Commission on reinsurance ceded at 60,000 minus 1 lakh 20,000. It becomes 1 lakh 20,000, 96,000. Operating expenses, management expense 2 lakh 90,000, 8 lakh. See that? Your management expense 2 lakh 90,000, 8 lakh. And your plus bad debt, your bad fire is 10,000, marine is 24,000. That should be added. So it becomes 3 lakh. This is 8 lakh 24,000. So all the schedule number 4 is over. The same thing will be put into revenue account now. Particular premium received A, schedule number 1, it's a income 10 lakh 40,000, 16 lakh 40,000. Then claims paid 2, 3 lakh 80, 7 lakh 60,000. Commission 3, 1 lakh 20, 96,000. Operating expenses 4, 3 lakh, 8 lakh 24,000. So it becomes 8 lakh. This is your expenditure. From this figure, deduct A minus B, revenue account, renewal account, A minus B, 2 lakh 40,000, 16 lakh means minus 40,000, renewal of account means profit or loss. So it is from revenue account. Renewal of account or A minus B, or it is called revenue account. Profit or loss. So it is 2 lakh 40,000 minus 40,000 is a loss. Loss in case of marine, fire in case of air. So somebody will call this as a renewal account, means we renew the accounts A and B, but actually it's a profit or loss. Renewal of, some authors also says is a renewal of account means A minus B. So difference is profit or loss. So this is a profit, surplus, this is a deficit. So this is considered as a surplus. This is considered as a deficit. So renewal of account means A minus B, revenue account, profit or loss. So this is a profit, this is a loss. So premium received plus reserve for unexpired risk plus additional reserve for unexpired at the end of the year, 50%, 100%. Then this is a balance, commission paid, commission received minus reinsurance ceded expenses. Then this is operating expenses. So this revenue account balance renewal, we say. So we renew the accounts. That means it may be plus or minus a. So it's a revenue account. That is profit or loss. 2,40,000 minus 40,000. So you got a surplus of 2,40,000 and deficit of 40,000 is there. So all the problems are same. All the problem goes to same. What is the format? Which are the 4 items are? One is called premium. Second is called the claim. Third is called the commission. Fourth is called the operating expenses. So in the premium is only an income. Other 3, 4, 5. So you have got first is the premium. Second is the claim. Third is the commission. Fourth is operating. Means 2, 3, 4 are the expenditure. One is the premium, is the income. How the premium received? Minus reinsurance premium, add outstanding premium of the current year, premium of the last year, add additional reserve at the beginning of the year, minus additional reserve at the end of the year, minus reserve for unexpiries at the end of the year, 50% in case of fire, 100% in case of marine, 50% in case of fire and accident, 100% in case of marine. Regarding the claims paid, minus reinsurance claim, add outstanding claim of the current year, claim of the last year. Regarding the commission paid, commission accepted should be added, ceded should be deducted. Accepted should be added, ceded should be deducted. Operating expenses, that is management expenses, depreciation and bad debt, all will be put into format. So difference may be surplus or deficit. Renewal will renew the, what we say that word, no, renewal means will renew the account, maybe profit or loss as per the revenue account. 2,40,000 minus 40,000. So profit or loss. Here surplus or deficit is a renewal account, that is revenue account. 2,40,000 minus 40,000, surplus or here. Some authors say we have renewed the renewal of account means will renew the accounts. No, it may be profit or loss as per the revenue account, surplus or deficit is there. So I hope all the problems are very, very easy. Here, the additional reserve in case of fire insurance is to be increased by 5% of net premium, that's all. In addition to, if the word goes in addition to, word in addition to means additional reserve, how much already there? 1 lakh plus 5%. 1 lakh plus 5%. No, it is not like this. Here, increase by 5% net premium directly. In addition to means 1 lakh plus 5% of the net premium. Here, additional reserve 5% of 12 lakh. In addition to, if the word no, 1 lakh plus 1,60,000. Here, no. This is a reserve, additional reserve at the end, 1,60,000. This is already you got. Additional reserve, how much you already got? Already got 1 lakh. Additional at the end, 5% of 12,60,000, totally 1,60,000. This is additional reserve at the end. The additional reserve is in case of fire insurance, it will be increased by 5% of the net premium. In addition to, we say that already additional reserve is 1 lakh minus additional 1 lakh plus 5% is 60,000. It becomes 1 lakh. See, assumption is old additional. First, already additional reserve is how much? 1 lakh. 5% of 12 lakh is 1,60,000. 60,000. Totally, it becomes 1,60,000. This is additional reserve 1 lakh plus 60,000. 1,60,000 already existing. How much? 1 lakh. 5% of 12,60,000, it becomes 1,60,000. Commission received, seeded should be deducted, accepted should be added. Management expenses and bad debt. If there is a deficient, they should be taken. Put it forward. Premium is income. Claims is an expenditure. Commission is expenditure. Operating expense is expenditure. Surplus is 2,40,000. Deficit is 40,000. Hope you have followed. We already solved about the 5 problems with the format. We'll have another 2 problems in next session. Till then, goodbye. Meet in the next class. From the examination of point of view, this will ask for 10 marks. With the balance sheet, it goes to 15 marks. If they ask the revenue account and a balance sheet, it will go to for 15 marks. If they ask only revenue account, it's only 10 marks. We'll have 1 or 2 problems next session, then we'll go to balance sheet. Till then, goodbye. Meet in the next class with a balance sheet.